Peter Tuchman is one of the most famous traders on the floor of the New York Stock Exchange. He's known as the Einstein of Wall Street.
Peter Tuchman, aka the Einstein of Wall Street, joins the podcast today. Now, Peter's been an institutional trader for well over 30 years on the New York Stock Exchange. He started all the way back in 1985. Now, on this episode, he gives us a breakdown of the history of the New York Stock Exchange and the evolution from pit trading to electronic trading. Now, most traders don't know and understand the history of trading itself, and Peter is the perfect trader to give us that breakdown. So in this podcast, you are going to learn from a trading veteran, and what he shares with us today will absolutely change your trading. He shares exactly what losing traders did decades ago, which they're still doing to this day, so you know exactly what to avoid.
Unsuccessful day traders love to blame everybody but themselves for losing money.
He also shares his thoughts on ICT concepts and the whole algorithm narrative that is shared so much in the retail trading space. People refer to things as smart money concepts and ICT concepts, for example.
It's all
He also shares exactly what it takes to be a professional trader. What would be your one key advice for traders out there? Or what would be your secret key, if you will?
okay.
Now, the podcast has taken a different direction. We are bringing the very best traders in the world with verified results directly to you so you can accelerate your trading game. We have a lineup of absolutely incredible traders, from ex-pit traders to verified traders to this day who are trading in futures, in options, in Forex. You're going to learn a wide range of strategies, wide range of psychological tips that are going to help you to accelerate your trading experience and, more importantly, results. Now, this episode is an incredible one to start that journey because you're going to get the history that is necessary and the lessons of the past that can be brought into the very present moment of all the trading that is going on today. The majority of the retail space today is focused on prop firms, and that is no problem at all. What they don't know is the history of trading and how that can actually help them in this day and age when it comes to tackling the markets. And that is why over the next month, you're going to see some of the very best historical traders, some that are world famous and some that were the best of their times that you still haven't heard of. And we're delighted to highlight them on this platform. Now, to celebrate this shift in the podcast, our podcast would not be where it is today without our sponsors. They are what allow us to go to Wall Street and do this walkthrough with Einstein on the New York Stock Exchange. So TradeZella, for example, is doing the very biggest sale it's ever done due to Black Friday, so it will be on until Cyber Monday. So you have 4 days from this release to get in on that. The code is Black Friday 24, and that will essentially give you 50% off the premium subscription at just $25 a month on the annual plan. So that's less than $1 a day for you to accelerate your trading. So use the link in the description below and the code Black Friday 24. With that being said, our other sponsor is Alpha Capital, one of the best prop firms in the world currently, who have paid out over $70 million to their traders. Now, also, I have a phenomenal code for Alpha Capital at Riz25, which gives you 25% off their two-step challenges. Now, they also have Black Friday offers, and they have recently launched one-step programs and three-step programs, so make sure you check out their social medias for those codes, as well as Alpha Futures, which is also running Black Friday offers at the moment. And I just want to say a huge thank you to every single one of you out there. We have just crossed 250,000 subscribers on the channel, and that's thanks to all of you and our incredible guests. Talking of which, it's time to jump into this podcast on the New York Stock Exchange with the one, the only, Peter Tuchman. The number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Peter.
Yes, sir.
Incredibly humbled that you invited us here.
I'm honored
to
as
come
well.
and witness the New York Stock Exchange. And being a veteran, like titled almost the most Wall Street's most famous trader.
Right.
You have well over 30 years of experience. I think 38 years now?
38.
Incredible. And I'm
Some
sure
say 138.
Really? I bet it feels like that after all the
Sometimes
experience.
it does.
Right? Definitely. And we want to just get some insights from you, from your vast experience.
Okay.
You know, we have a lot of the audience who are in the start of their journey, very near the start, 1, 2, 3 years in, especially on the retail side of the space as well. And therefore, can we just start off with, like, why did you get into trading?
First of all, welcome. Right, I love to do interviews and things in this room because I'm a history buff. You know, this has been my world for 38 years plus, and so the power and the history, it is the greatest financial institution in the world. Right, when you think of trading, whether it's day trading, investing, or anything to do with finance, this is the hub. This is where it all happened. We're standing here on the corner of Broad Street and Wall Street, where George Washington was inaugurated president, where the Federal Reserve is. This is the street. Wall Street used to be a wall, and this used to be a canal connected to the base of Manhattan, where in the 1650s, the beginning of commerce, you know, as the world started to open up, you know, boats used to come into New York Harbor. I think it was called New Amsterdam Harbor at the time, and they would bring the commerce, whether it was tobacco or lumber or whatever it may be back then, on wheelbarrows or on boats up to a tree that was out front of this before the building was built, called the buttonwood tree. And there was already back then in the 1650s brokers, people, it was like the corner. If you want to relate it to today's world, it was the corner, right? Where business may be transpired. We don't have to get further into it, but, you know, and so there was already the concept of brokers putting buyers and sellers together, consummating a trade, right? The price of that, depending on supply and demand, as we learn, and which goes all the way to today's trading, but how exciting that is for us to be here, you know, at the crossroads of that history. And then what ended up happening was that went on from 1650 until 1797 with the commerce and whatnot. This building is built in 1903. The ceiling is all gold. If you look at this top piece there, I don't know if the cameraman can get that, but that pays homage, this strip here, those are tobacco leaves.
Okay.
Right?
Okay.
So, and then there are a number of other things that sort of grasp the incredible history of commerce and finance and the building of this country, let's say. So that was exciting. And then in 1797, they built, they made a thing called the Buttonwood Agreement. It's upstairs. We'll be able to take you upstairs to see it. It was a contract between 26 brokers saying that going forward, that we are establishing business practice going forward. Our word is our bond. Okay, we do business at this price, this way, using these business standards. Integrity is the key to this game. And so that started the journey, right? And so that went on, and then in 1850 they built a building here called the New York Stock and Exchange. It was the beginning of a housed brokerage establishment, and then in 1903 they built this building. So I say all this to say that there's a lot of history here. This is the crossroad of everything that, you know, people love. People who are now day trading or trading, the people who are in the beginning of their journey, as you described, are fascinated by this place. They love to come here, you know, and I'm really happy to show it to them. It's my office, right, in a way, and I am the ambassador of this place. And I am the ambassador is because, you know, one of my big premises is I you know, it's not my line, but it's a great line. If you find something you love to do, you'll never work a day in your life. So when my journey to coming here, my parents are immigrants. They're Holocaust survivors. They came here in the late 40s. They met after the war. Their families had been decimated, and they met in a displaced person camp, fell in love, came to the States. My father was a doctor, and so I grew up here in New York City, and I had a really extraordinary upbringing. Business was sort of, felt like it was always going to be my calling. I was an entrepreneur, a hustler as a kid, selling t-shirts at Grateful Dead shows and I was the doorman at Studio 54. I'd done all kinds of fun things. I owned a record store in Bleecker Street. I traded commodities. I was almost able to complete a MBA in the early 80s. I ended up then going to live in West Africa, the People's Republic of Benin, for a couple of years, where I did the accounting for a Norwegian oil company. And then I came back here in 1985, and I was a kid. I was 26, I think. And I got a summer job. My parents said, it's time to get busy. Let's, put on your big boy pants. Let's get busy. So I got a summer job here due to a connection that my father had. He had a patient who was a partner in a brokerage firm. And it was the 80s. Wall Street was on fire. So there's no training for this job. Being a broker on the stock exchange, giving you the right to trade stock here, you need to have a seat on the exchange. Historically, in 1903, 1,366 seats were established, like a taxi medallion, right? And there are a number of things in history and business where there's a limited number of rights or a license or a lease to do something that's very exclusive. So that's the seat on the exchange. It's not a chair, you can't sit on it, but it does give you the right to trade. So coming to Wall Street in that period and going back to the 20s, 30s, and 40s, everyone's dream is to become a broker. As I said, there's no job, there's no training to get that. So everybody who came here and stayed here started at the bottom of the chain, right? There was a sort of a caste system, a support staff of the different jobs that were here. You had what was called a squad, a runner, and everybody was demarcated by a colored jacket with a different color and different numbers and different whatever. So there were squads, those were the runners. When we were trading open outcry, we would be in the crowd trading, and we needed to get, before cell phones or anything like that, we would be, there were phone trees all over the floor. We'll sort of take a few shots of that afterwards to give people a breakdown, because amazingly enough, this room has not changed. Besides the advent of technology, the room has not changed in its concept, the way it works, the format for 130 years. So that's exciting. That shows its legacy and significance. So squad, beginning of the rung here. You got a job here as a squad with your hope that you would then become a teletypist, become a backup clerk, a real clerk, a retail clerk, an institutional clerk, and a broker. That journey used to take 10, 12, 13 years because nobody left the job. It was a great job. I got very lucky. I came down here, and the minute I walked in, everybody has a different comfort level of where they like to be in their work mode. To sit with a coffee, have a cigarette and read the paper and slowly wind into their day. That's not me, right? I'm a guy who comes out of the gate like at a horse race. And so when I came down here, I was lucky enough to get a job as a teletypist for Cowan and Company. May 23rd, 1985, I walked onto the floor, and the energy and the adrenaline and the excitement and the chaos for me was just, those are the qualities that make my brain relax. It's not everybody's journey, but I love that stuff. I thrive on that. And also, one of my dreams was, I love branding and marketing and advertising. So as we look around this room, you guys are seeing that now. This is the most extraordinary. For me, those things are motivating, right? I think people need to also find things, keep your eyes open, look for the signs of things that get your juices flowing, right? That's a big thing for me is, opportunity is not going to find you hiding under the covers at home, trying to figure out what your next move is. Go out there, try things. We learn so much more from failure and stumbling and getting back up. The journey should be an aggressive journey forward, and so that's super important. So I started as a teletypist. I did that until the summer job was over, and then I said, "This is for me. I love this place." And we got along well. I had the right personality qualities for the place because it was wild. It was the 80s.
Definitely.
Okay, so it was a wild and crazy, human interacted, open outcry, paper, right, screaming, yelling, just like you see in the movies. It was real. Place, but for me that was like I felt I was at home. So I stayed and I asked for a job as a clerk, or option clerk actually. So back in the day, the way this room is broken down is on the outside of the room are the brokerage firms, whether it was Merrill Lynch, Smith Barney, Morgan Stanley, Wells Fargo, whatever they were, Goldman Sachs. Those would be there would be stalls with hundreds of telephones connected to trading desks upstairs, whether it was down the street or in Singapore. And so if you worked for a brokerage firm, there would be teletypists, there would be clerks, backup clerks, retail clerks, and there would be the head institutional clerk. And then there were brokers who were house brokers. So That's how the company runs. So they were connected to their trading desks, and the trading desks, I mean, people should know how the business used to run. It still does to a certain extent, except it's obviously technology. But the decisions are made upstairs. Portfolio managers and research and all that. Every company has them. Yeah. They have assets under management, or they're proprietary traders, or they're portfolio traders, or whatever it may be. All that is upstairs. Yeah. And then in order to we are at the point of execution. We're kind of the boots on the ground. Yeah. No disrespect to the military, but so from our perspective, we're in the room where it happens, right? Where when you buy and sell stock, all the order flow comes from all over the world. And it goes to the post. The post is where market makers are. So there are brokers, there are clerks, and there are market makers. Those are the three components. In the old days, there were many other support systems before technology to create this room. Now there's a few, but it's a little different because I can send 1,000 orders out in 11 seconds. So all that support staff and brokers, this room used to have 8,000 people in it. Wow. Now there's 600. Right, so the use of brokers and use of support staff is much less. Yes. So, that was kind of the beginning of my journey. I was very lucky. The road, as I said, used to take 10 to 13 years to become a broker from squad if you were good, if you thrived in this environment. I was lucky. One guy got fired, one guy quit, one guy died, and I got moved up the ramp. Yeah. I didn't kill him. And I got my seat. I got my seat on, I believe it was April 9th, 1988. Yes. And these are milestones, right? People should know in their journey to whatever they want to become. Branding, marketing, advertising, the cloud, whatever it may be. We should mark the milestones along the journey for a number of different reasons. And this may end up being more of a motivational podcast than a stock podcast, but for me that's super important because if we find something where we're comfortable, where that really engages our brains, look, nootropics is a big thing right now, to find things that will help your brain, work on 100%. Historically, you didn't need additional supplements to make your brain work. It was when you found something that was for you, that engaged you in every possible way, right? That was the stuff. That's the feeling everybody should be searching for, and they should be searching for it in trading, right? This is not a get-rich-quick scheme. People should not be looking for the easy way out, because we talked about it. I have a partner named David Green. We run a trading academy called Wall Street Global Trading Academy, WSGTA.com. We have students from all over the world, and we teach technical analysis. I'm the motivator in chief, and he is the teacher. He's an amazing teacher. And what we find is that you'll see young traders who, we'll ask them, how are you doing? And they're going, I'm batting 80%. I said, so then you must be flush, you must be green. And they said, no, I'm down 6,000. I said, well, how is that possible? Well, I had 4 winning trades, and I made $100, and I had 1 losing trade for $8,000. And I say, well, that's not a sustainable trading model. We need to understand more of the nooks and crannies. It's important to know that prior to 2020, there were barriers to entry of people who were not wealthy to trade the market. You needed to be an accredited investor. What did that mean? That meant that you had to prove that the money you invested in the market, there were no iPhones, there was no trading apps, there were brokerage firms. You called a brokerage firm, you wanted to trade or invest, you had to prove to them if you lost 100% of this investment, it would have no effect on your standard of living for 5 years. Wow. Well, nobody but rich people can do that, right? Okay, so that kept everyone else out. That's the 1%, and there was 99% who couldn't be in the market. But suddenly something transitional happened on May 20th, 2020. Robinhood and the iPhone and the stimulus check and COVID and everyone sheltered in place at home and Reddit and Wall Street Bets and the internet blowing up and and you suddenly had this perfect storm where 40 plus million new traders came into the market. Now look, anybody who hit a buy button on May 23rd, 2020, whether it was in a meme stock, whether it was in any stock after the sell-off from COVID, made money. If they sold the stock when it went from 2 to 20. But there are probably 80% of the people who bought it at 2, it went to 30, and they never sold it because they were told on the internet it was going to the moon, and it went back to 2, and they still own it, right? 8 out of 10 day traders blow up their trading accounts and are not successful at doing this. That was my early part of the career. I did get a seat. My business has changed over the years. For 20 plus years, probably 30, I was an institutional trader. I was an arbitrage, a convertible arbitrage trader. I did risk arbitrage, convertible arbitrage. I worked at a number of different firms. The qualities that I have that make me a good trader is I'm a good people person. I'm good with numbers. I think quickly on my feet. And so for my job, those are the quality, and I thrive on chaos and adrenaline. Okay, so, and that sort of brings us to, you know, how I got here, my journey to getting here, the journey that where we get to. You know, some of your audience may be day traders as a part-time thing, but also the discipline and consistency to be good at it. Some of your people may go on to become day traders, that's their job. Some may get into finance forever. Some may be just investors and they have another profession. The journey you should go, as I said, we learn more from our failures than our successes. You know, I don't believe there's any door that you can't knock on in this world, even though the world, everybody's angry at each other and they hate each other. I don't even know, there's no word to describe how screwed up it is. But anyway, everyone's journey to their profession should be one of excitement and happiness. You shouldn't be at a job that you hate. And trading, if you know, and I can go way more into this, but there are successful day traders and there are non-successful day traders. The qualities and the strategies that successful day traders use are the exact opposite than the ones who are unsuccessful. Unsuccessful day traders love to blame everybody but themselves for losing money. The market maker, he's out to get me. He knows where my stop orders are. I hate him. He's there to screw me. You know, the momentum guys, they're screwing me. The FOMO guys, I bought it, it ran up, it came down. If you're successful and you're doing it the right way, there's nobody to blame. You should be empowering yourself that, oh, I was disciplined. I did the right thing. I had a plan when I got into a trade. Executing a winning trade and executing a losing trade, if done well, is the same thing. These are the skills. It's a skill set and a mindset to be successful at day trading. You know, if everyone should go out and watch the original Wall Street movie, it's the story of Ivan Boesky. He's a famous speech, greed is good. That's how I got here. And I'll pass it to you.
Definitely, and I appreciate you going through all of that. The history is incredible. You know, I feel like a lot of people look up to Wall Street, but they don't know the history behind it, but now they will. So I thank you for sharing that. And you know, some key things that you mentioned there, obviously it's really interesting to hear that it wasn't really something you planned in terms of trading.
Correct.
It was like, you know, you came for the summer job and then the environment just took it, you know, you really resonated with the environment. And that's something we can really touch on. In terms of the environment, what were like maybe some key lessons that you took away from being in this environment that helped you as a trader?
So let's be clear that I work here and I trade for hedge funds and institutions. Up until recently, I never traded stock for myself, okay, because there was a fine line between conflict of interest between me trading for myself and me trading for customers. So I made a decision way back. I am a regulated broker. My badge number is 588. I'll show it to you downstairs. It's the seat that I have to trade stock. So that's what I do for a living. The world used to be, I sort of use the analogy of a puzzle, a board game, you know, a cardboard puzzle.
Yes.
The world and the markets used to be a 250-piece puzzle. You know, when you're a little kid, you get a 6-piece puzzle, then 20. And as your mind grows and it has the ability to see things in a broader scope, you're able to handle a bigger puzzle. Well, the world and the markets now are a way bigger puzzle. I think we've gone in the last post-COVID from a 500-piece puzzle to a 1,000-piece puzzle. There are so many different economic and you know, we have 50 million new retail traders. We have the internet, right? We have free trading apps. We have the market opening up globally. Anybody with an iPhone and $100 can trade stock. There's fractional investing. There's option trading. There's forex. There are ETFs. If anyone doesn't know, there's all the market is an amazing skill of searching for products to give people the opportunity to trade.
Yeah.
In the old days, you wanted to buy you wanted to buy a stock, you'd buy one stock. If you wanted to buy if you liked the sector, well, you had to buy a bunch of stocks in a sector. Well, now they created an ETF, which it may be an energy ETF or a sports ETF or a retail a luxury ETF or whatever. So the market over the last century has built these financial instruments so that there's something, if you want to trade anything, you can trade it.
Yeah.
And that's amazing, right? That's brought in lots of different people, but what it's also done is confuse the currents of the market. In the old days, if I was trading IBM because IBM was coming out with a new computer, yes, and the earnings were projected to be good, yeah, and they had, I like the story, I like the people, I like the process, and I like the future, I would buy the stock, the earnings were projected to be good, yeah, I would own it, the earnings came out, the stock went up, it was a beautiful day.
Yeah.
Well, you have the option market, you have option layoff business, you have long-term options, leaps and beeps and schneeps and all that other stuff. And so the way the market moves, the way stocks move, yeah, with all the economic data, I'm a firm believer that post-COVID, the world has completely changed in so many different ways. Our mindset, the way markets work, the economic data, so, and I'm afraid people are, also the media, there's access to so much information.
Yeah.
Sometimes too much information is not a good thing,
yeah,
right? It's the same thing with day trading. We recommend at Wall Street Global Trading Academy to not fill your charts up with hundreds of different indicators, yeah, so that your chart looks like air traffic control during 9/11, right? That's not the goal. We use the RSI, we use pivot points. Pivot points are just on Thinkorswim or Interactive Brokerage. They are a mathematical formula, support and resistance, and obviously moving averages. Right, we use the EM exponential moving averages. We think it's a better indicator. So the qualities that I learned from here are never get emotional about money. Mm-hmm. Think before you act. Read the room. Yes. Avail yourself of all the information necessary. As a day trader, what's so important is that in a market, so historically markets used to move up and move down at small increments. Yes. There would be a crisis, then things, I've lived through the crash of 87, the bubble of 2000, the financial crisis of 07, COVID, and now, the Trump era, and now whatever's going on here. Those were crises. Historically, you would think that those were the worst times, yeah, but historically, every one of those crises has been a better buying opportunity than selling opportunity. That's something. So contrarian thinking is something. Always avail yourself of all the information. Don't get caught up in the scam and the rug pulls. Do your own homework and due diligence. In a market that goes up and down thousands of points in a day, you need to protect and identify your downside risk. Yes. Am I willing to risk $50 to make $200? Mm-hmm. Yeah, all day long. Am I willing to risk $200 to make $50? Not so much. Yeah. Because if I have one losing trade, I have to get 4 winners before I am even flat. Yeah. So these are the mindset and the psychology. Psychology is key. So it's how you think, how you act, how you react to, yeah, things. Those are the things I've learned from being around people, being part of a team. Yes. Right? Listening.
Would you say that's been a big part of obviously this environment though? Because there's a whole generation now of traders, as you've mentioned, trading from home with the barrier to entry is so low. Right. And they spend most of the time, if not all the time, alone in their office, yes, by themselves.
God bless them. I don't know how they do that. And unfortunately, it leads to bad habits. Because if you don't listen to the right voice, we all have 2 little people on our shoulders. Yeah. There's sort of the greedy, emotional guy, and then there's the one who's disciplined and consistent, yes, right? And we are the paradox. And as a day trader, we may have we may have a whole slew of people on our shoulders, depending on how greedy, how irresponsible, how whatever we are. Yeah. And so, the paradox is, who do you listen to when, it's to be a successful day trader is a powerful thing. It is not easy. 8 out of 10 people who do it do not succeed.
Are there people who arrive to the exchange, I would say probably more back in the day when you had all the people on the floor?
Right.
Were there people in those scenarios where they would come and they didn't have what it takes and they would have to leave?
100%. This is a place where it was very apparent very quickly whether this environment was one you would thrive in or whether it would kill you. And so you came in, there are no holds barred, you came here for a week, a month, a semester, you knew if this was the place for you very quickly. It's super raw, it doesn't, it's not hiding anything. But I'm glad you reminded me of, so think about 8,000 people, it was a different method of trading, the research and the dissemination of order flow, the interaction with other brokerage firms. It's important to note, before electronic trading, when things were done with open outcry, most trades were block trades, 5,000 shares, 10,000 shares, where the negotiation to buy or sell stock between me as a broker, representing my customer, and the market maker being the pilot of the plane, the one who's putting all the order flow together, and then the negotiation of all the other traders, our goal was to put on blocks of stock. Like you walked into a crowd, I had 10,000 to buy. Hey Joey, what's going on? The market maker, he'd say, Pete, there's 3 sellers over there, 2 buyers over there. What does everybody want to do? Well, I got 10,000 to buy aggressively, and I have 10,000 to buy with a $30 top. What do you have to do? I got 25,000 to buy. I'll go along with the rest of the group. And the other guys, I got a firm $28 top, 500,000 shares. If it gets there, I buy it. And then you have the sellers. The seller, one is a go along, one is limited, one is aggressive. And so we had a negotiation. Let's get some stock going here. What do you want to do? What's the first thing? I'd say, I'll pay, you've seen it in movies. I'll pay, 30.5 for 50,000 shares. The seller say, sold. The other guy will go, oh my God, I'll buy stock. I'll pay half for 50,000. The seller behind him will go, shit, I just missed that one. I'll sell 50,000 there. I'll sell that to you. And then this market maker, who is there to add liquidity into the market and despair of volatility. If there are 2 buyers and 1 seller, he will sell it to consummate a trade. If there are 3 sellers, 2 buyers, he will buy it to consummate a trade. He's there to create a smooth and active market, to fly the plane and keep the balance and the turbulence from happening. That's the good part of his job. He's also the one who has to buy or sell the stock in absence of the public. So during the crash of '87, at the end of a very bad day, the market maker was the one who bought it at 120, at 100, at 80, at 60, and at the close of business on October 7th or 9th, I can't remember the day, there were market makers who owned a lot of stock at a much higher price. And they needed to be able to capitalize that. And many of them went out of business.
So definitely, I was going to say, do you miss those days? Do you miss that environment?
I would shoot myself in the foot to get those days back. Yeah, I don't own a computer. I don't like technology. It doesn't work with my brain set. I have a little bit of a spectrum brain. So I see things in groups. I'm a real humanist and a people person. So I love that stuff. So I miss it deeply. I love the chaos and the interaction, the screaming and the yelling and the excitement of that. I loved the way the process worked, the negotiation. It was wild. I mean, there were times where there were 40 people in a crowd, and the war in Iraq broke out and we were buying, a tank company and, it was before the internet. So the dissemination of information was sort of along through a pipeline. Who got the info first? And how did they want to react to it? And so, and you'd be in this stock and your people would go off and you'd come here and you'd miss some stock trading and he'd say, I need you in the other room. I need you to go buy me 500,000 of Philip Morris over there. Something's going on. And you'd ask the market maker to watch your order for you and you'd run to the other room and you'd start buying stock like crazy and you'd report it to the thing and you'd put your hand in the air and the squad would come and take the report and then you'd run back here and see how you're doing. That for me was that was a great day. So I don't, my skill set is people and be able to just deal with the chaos, but I have no, not being invested in the market. For me, from 9 to 4, I don't care if the market goes up or down. I'm a customer man. I want to be able to be transparent and give the information I need to my guy or woman, and I want to give them the best price I can, my fiduciary responsibility. And so yeah, those were the days. It took me, I was actually the last broker. So the transition from paper to handhelds, we've had many alliterations of the handheld computer on the floor. One of them was like a Palm Pilot, if you'll remember that. It was like a little thing, and then it grew to be a little square, and then it could be, now it's like an iPad. I was the last broker out of 1,366 to relinquish their paper pad and pick up, they basically said, Pete, on Monday, if you don't have a handheld computer, you're out of business. So I had to surrender. And so, I'm a humanist at heart, and I love that. So, how do I live with the new, adopt things? I come in here and I sort of, that's important for people to know too, that life is going to change, business is going to change, your environments are going to change, right? And I don't like change, and most people don't like change. But it's going to happen with you or without you. And it's way bigger than you, right? So I fought it for a while and I lost, right? Because I was not, me being the last holdout wasn't going to change the way the business was going to go. So what did I do with that? I decided to pivot. Pivoting's key in life and in trading and in everything. If one thing's not working, pivot. I used all this, the excitement and the branding and the advertising, I'm on the board of many, many different companies. I'm a big supporter of women in business. In my 55 years, I've had an extraordinary, wonderful, long life, way longer than my years show. And so I've learned a lot. My recommendation to everybody is get a mentor, get a coach. Listen to them. Find somebody who has what you want and go towards it. Don't surround yourself with people who are knocking you down, who are not empowering you. You should be traveling with a pack of your peers who are pumping you up on a daily basis, right? I'm not a firm believer in, in dying with the most toys. Toys are fun, but as I said to you, saw me interact with Kevin O'Leary. I listened to him. One of my biggest pet peeves is that we invest in, we buy stuff and we don't buy stocks, right? When young people will ask me, what's your best advice? And so I heard Kevin say this line yesterday. My line is invest in stocks, not stuff. He was saying the same thing. He said, our biggest enemy is our closet. We've got a closet full of shoes and coats and shit we bought because we wanted it. It was impulsive. We'll never wear them or use them again. And think about it. So I always say to young people, the iPhone comes out every year. If my iPhone 12 is not broken, I don't need the 13. Why don't I go out and buy, if you're a loyal customer to a consumer good that you love, that means you like the story, you like the product, you like the company, right? If you buy it, we are the most loyal consumer generation of all time. So why wouldn't I hold off on my impulse to buy the 13 for $1,000 and go out and buy 4 shares of Apple stock? So at the end of the year, I'll hopefully have some assets. I will have built a portfolio. I will have invested in my future. Whether it's in sneakers, do I need another pair of sneakers? No, buy some Nike. And I'm not recommending any stock, disclaimer. But think about that, 99% of the stuff we buy, the minute we buy it, it goes down in value. And so buying something here, chances are, if you do your homework, it may go up in value. And so, that's one of the fun things that we need to do. Go ahead.
Definitely. And we'll just finish up with some key questions then.
Go ahead.
Like you mentioned about technical analysis, and you mentioned like EMA, support resistance. And there's a huge debate in the social media side of the trading space in regards to like technical analysis. This style is better than the other. People refer to things as smart money concepts and ICT concepts, for example.
What's ITC mean?
It's like fair value gaps and order blocks, and it's talking about the algorithms. Well, that's the best. That's what I want to ask you.
I know.
When you hear these things, being someone who's actually on the floor, and experienced and has the vast experience that you have, what are your thoughts when you see these huge debates online about theories, if you will?
Yeah. Okay. So, first of all, I think it's important to know that actually, trading. The trading that goes on here, the day trading, look, so we are the end spot of all the day traders.
Yeah.
But historically, day traders aren't trading millions and millions of shares. So a majority of the flow, all orders do end up here. But the way we trade here on the floor, even though all the order flow of every day trader in the world ends up here, that's not a majority of the way things work. So when we get order flow, we don't use the decisions. Every different kind of order comes from a different place. Why is that person buying it? Did it come from some research? Are they buying it? Are they investing in it? Is there a long-term game? Is it a hedge against something else? So what goes on here should not be thought of as the day trader mindset.
Yes.
As you described, a day trader is someone who's sitting alone in a room with a couple of computers, a couple of shekels in the bank, who has sold a bill of goods that you could make a bunch of money on Wall Street if you do this, 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 and this. And then there's another guy who says, no, don't do that. Do this, 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 and this. And then don't do that. So there's a lot of good information and a lot of bad information. There's a concept in the social media space and in the retail trading space that the market maker is out to screw you.
Yeah.
That don't use stop orders, use mental stops, because the market maker sees your stop order, he takes the stock down to take you out, and then he runs the stock up. Let me be clear. I've been here for 137 years. I know market makers. I deal with them every day. They're trading millions and billions of dollars in shares every day. The last thing they're worried about is no disrespect to day traders, whether you trade 1 share, 10 shares, or 1,000,000 shares. They have way more important things to worry about on their P&L and their performance than seeing your stop order and trying to sabotage you poor little retail trader. So for the record, disclaimer, that's not their goal. I had a day trader on the floor yesterday from Tobago, from Trinidad. And he was one of those guys who said he uses mental stops. And why do you use mental? Because the market maker's out to screw me. Okay. Unsuccessful traders try to find somebody to blame for their failure.
No, but you completely got to the point I was trying to get to, which is like the reality. There's all the fear mongering. There's all
Gotcha.
This is the best way. This is how the banks do it. This is how the institutions do it.
Gotcha.
The reality being exactly what you said there. That's not the case. They have much bigger things to focus on.
Right. So they're right. So that's one thing that's super important to know. But look, there are many theories and many strategies. Some are good, some are bad. Fundamental analysis versus technical analysis. Some people think technical analysis works. If I can share anything that I've gotten from all my experience, if you find something that works for you, and works means makes you profitable on a day-to-day basis. What is a day trader? A day trader is somebody who slices and dices trades to make money and be green at the end of the day, the week, the month. I don't want to hear, you are not successful if you made 50,000 today and then tomorrow you are down 80,000. Or you are long a stock and you are up $30,000 in it, and you turned a winning trade into a losing trade. One of the great problems of the market, turning a winning day into a losing day, turning a winning trade into a losing trade, not knowing when to stop trading when you're losing. The psychology of trading, anybody can hit a button, anybody can enter a stop order, but it's what you do when you get into a trade. As I said, executing a profitable trade and a bad trade correctly are the same thing. It's following rules. Anybody who tells you they day trade and they never lose is full of BS. A lot of people out there are showing you after the fact trades, and there are guys who are doing pump and dumps. They just indicted these guys on Twitter Space who created a huge Discord with hundreds of thousands of players. It's an old Jordan Belfort, Wolf of Wall Street pump and dump, where they would create, and they do it here every day. It's being done. There are bad actors, bad players, right? Because everybody wants to get rich, right? So there are guys who create these huge Discords. They get a big community. They have a chat room on Twitter Space. They're all talking about trading the market. Then they will go out and buy a bunch of stocks, some of them penny stocks, some of them cheap stocks. They'll tell the community, I like XYZ. They'll rush in, and while you're buying it, they're selling it.
Yeah.
Trust me, they got indicted. Some poor schmeck got indicted for $100 million scam against retail traders, pump and dumping them. I beg of you all, call me, email me, DM me, whatever you need to do. There are more bad actors in the space than good. As I said, the world we live in now and the market we live in now is went from a 200-piece puzzle to a 1,000-piece puzzle. You could be in a stock. The earnings are out. Great guidance, great earnings, great revenue, and it goes down $50. One of the things that people need to note, which has never happened before, it's happened over the last 5-6 years post-COVID, is that we've rarely seen a day where there's been less than a 1% move in the market and as much as a 7% move. Well, if you're on the wrong side of that kind of a trade, it's very painful. Yes. Those are trades you may not come back from. So I beg people to do their homework, do their due diligence, learn how to day trade, find something that works. Okay, use stop orders, I beg you. When you get into a trade, have a plan. Why? Ask yourself the first question, why am I buying or shorting this stock? Did some Uncle Herbie on the internet tell me to do it? Did I see it on Reddit? Am I watching some internet schmutz? Or does it set up technically? There's only 2 reasons to buy a stock, price action and technical analysis. In this market that goes down 1,000, up 1,000 in one day, these are moves that used to take a generation to move. Unheard of to think that in the morning we're in a bull market and in the evening we're in a bear market. That used to take a generation to happen. So if you're on the wrong side of a day trade in a market like that, you're screwed. Okay, so have a plan when you get into a stock. Why am I buying or shorting this stock? Okay, have an exit strategy. Have a stop order on every trade you do. You buy 100 shares at $50, and we believe on every order you do, put in a stop order. I mean, I'm talking every order. As I described to you before, there are people who use a stop order sometimes and not, and they lose 8,000 when they only made 400. No matter what you do, have a plan when you get into a stock. Why? Because price action and technical analysis tells me to do it. It's found its support and resistance. It's a moving average trade. It's a trend trade. It's a far from moving average trade. It's a double top, double bottom, whatever. There are 5 really great technical analysis trades that we teach. And then there are criteria that must be followed for each one of these trades. And each one of the criteria must be fulfilled. If you're in a trend trade is when a stock is going up for more than 30 minutes and it pulls back to the 9 or the 15 EMA, you buy it, okay? And then the minute you get into it, you put a stop order in 1% below the price of the stock. If I buy 100 shares at $50, I put in a stop order at $49.50, down 50 cents. If it goes against me, and it can do that for any number of things. Somebody shouts something out on the internet, a war breaks out, the market turns south, they have a bad bond auction, any millions of different, 1,000-piece puzzle worth of stuff can happen. Doesn't make me a bad trader. I got stopped out on the stock, but all I lost was $50. So if it goes against me, I'm out. Okay? Never change a stop order. Never go, oh, it looks like it's getting to me, I better change it to $48. Never change a stop order. Strict discipline and consistency. Psychology of trading. If it goes up to 50.5, I immediately sell half of my position. I have money in the bank, cha-ching. Trading from a positive P&L is the greatest confidence builder in the world. I then move my stop order up from 49.5 to 50, locking in break even. How wonderful is that? I just made $50 and now I cannot lose money on the trade. What a great feeling. Okay, this is the exact opposite posture than losing traders do. Okay, so you get into a stock for the right reasons with a plan. You put in a stop order. If it goes against you, you get stopped out. Goodbye, good luck, it's okay. If I start making money, I sell half of the trade, 50%, 100 shares, I sell 50, up 50 cents. I lock in a little money, I move my stop up to break even, now I can't lose money on the trade. Well, now I can do anything I want. We recommend, at 51, we sell 25% more of the trade. We move our stop order up to 50.5, locking in a $0.50 profit. So I'm riding pretty. I'm driving down the highway in a Tesla. No recommendation of Tesla. But you know what you see where I'm saying?
Yes.
As opposed to buying at 50 because somebody told me to, having no stop order. It goes to 49. I say, oh shit, I buy more. It goes to 46, I buy more. By the time it goes to 42, I'm down $8 grand, I'm nauseous, I'm puking outside in the wind, and I sell it, and inevitably it turns around and goes back up.
Yeah.
And I got to find someone to blame for that shitty trade.
Definitely.
If you're averaging into a trade, you're in a bad trade.
Yes.
Plain and simple. So then, once I've sold half of my shares at 50.5 and 25% of my shares at 51, and I brought my stop up to lock in a $0.50 profit, then with the last 25% of the trade, I put a trailing stop, and if it keeps going up, I just keep making sales along the way and get the most out of my winners. And I lose the least out of my losers. Amazingly enough, 8 out of 10 day traders will stay in a bad trade for hours and will get out of a winning trade immediately because they're in the trade for the wrong reasons. They got into a winning trade by throwing a dart at a board because they got lucky. But in that mindset, you're either going to be lucky for $1 or wrong for $10. And that's not a sustainable freaking strategy for trading. FOMO, hype, hope, okay? You not using stop orders are not sustainable trading strategies. So imagine that. I just described to you the two scenarios where I blew up my trading account or I made 250 bucks. I'll live through that. I'll get on. Now, if I get in the trade and I get stopped out, I said, okay, I go to another stock. It sets up technically. Market tells me to buy it. I buy it. It goes against me again. I get stopped out, 50 bucks. It happens a third time. I have 3 losing trades, 3 different stocks, 3 the same stocks. I've lost 50 bucks, 50 bucks, 50 bucks, depending on how much you're trading. 100, 100, 100, doesn't matter. 3 losing trade rule. I turn the machine off, I go home. I'm having a bad day. It doesn't make me a loser. It doesn't make me a bad trader. I'm having a bad day for whatever reason. I walk away, go to the beach, have lunch with your partner, whatever. Move on. I will come back from a losing day, but I will not come back from a revenge trade day. I will not come back from a major big losing day. And my goal is for people to make small bits of money over the day, the week, the month, the year, and have a positive P&L.
Exactly.
That's it.
Exactly. And we'll finish up with 2 final questions then. One being, you've mentioned obviously being here for the crashes, being here in this environment. And what can you say in terms of like what the sort of tone in the room is when even that night, like you said, nowadays, it could be a tweet. It could be some sort of economic event. It could be, I think recently I saw one of your posts actually in regards to a fake AI picture that then had a little shift in the market. And how are people reacting and what's the tone like, especially let's say the big crash of 2007, 2008. What was it like in here?
It was unbelievable. And I've often talked about it, about the different crises going back to 1929, 2000, crash of 87, 2000, 2007, and COVID. And each one of these crises, a couple of things that are important to know about them. Each one of them had components that were different that made them happen. And I'm happy to break that down to you, what they were. But net over time, they were better buying opportunities than selling opportunities. So I mentioned the Wall Street movie is because, the original movie, because Charlie Sheen says to Michael Douglas, it's the story of Ivan Boesky. Ivan Boesky was a corporate raider who claimed that he was having premonitions about stock mergers. And in fact, he was getting inside information. And he was indicted for $181 million. And spent a number of years in prison. And but anyway, in the movie, Charlie Sheen is Dennis Levine, who was the gentleman at Goldman Sachs who was giving him the inside information, and Michael Douglas was Ivan Boesky. He said he got him into a trade, and the trade was going down badly. He said, Gordon, never get emotional about money, right? You cannot trade having an opinion. You cannot trade with emotion. You're better off trading with greed than emotion, okay? Because those are just not the right qualities. We are firm believers. If I like a story, a product, a story, a company, and their future, invest in the company. But when you are day trading, sometimes we don't even know what the stock is. Okay, there are certain rules, what stocks we will trade. Minimum of 1 million shares a day. Make sure that the spread, the room between the bid and the offer, okay, it's 30 cents, 35 cents. It's 101, 104. the larger, if you're slicing and dicing a market as a day trader, if you're paying up $1, the spread is wide, there's no liquidity in the stock, you're trading at a disadvantage immediately. I want to be able to buy a stock very tight or short a stock tight, so that if my premise is right, I'm immediately trading profitably, as opposed to chasing that I already missed the move. Each one of the crises had a different component. The crash of 29, people can go do their own homework. The crash of 87 was very complicated. The market was at a high. It was some things involved with insurance and whatnot, but the environment was ripe for a crash. And there were a couple of catalysts to the crash. People can also do their homework there. But think about it, that was probably the largest percentage move on the downside, I think, of any of these crashes. It was a different world, it was a different time. It was paper, no technology. You know, stocks that were trading at 160 closed at 60. Companies that were market makers in these names went belly up out of business. You know, at the end of the night, we got to clear up the books. If you didn't have the money to support your positions, you went out of business. A number of firms were able to buy up small companies that went out of business that day, and they've done quite well over time. But that was wild and crazy. I was a clerk in the crash of 87, and it's a day I will remember. It was a number of weeks, but obviously culminating in the one day of the big Black Monday. Black Friday, Black Monday, I don't even remember. But I remember it well because I had, you know, orders were coming. They had just developed a thing called the DOT system, which was a data order trade. And there was a way of, in the old days, if you wanted to buy 100 shares, 500 shares, 1,000 or 1,000,000 shares, you called it down on a phone. Hey, Peter, buy me 2,000 shares of IBM at blah, blah, blah. Well, they devised a system where you had a teletypist upstairs, input it, and then we had this little machine, and it would spit out the small orders. They were called dot orders. They were 100 share, 500 share, 1,000 share lots. The machine was spitting out orders. That was retail order flow. Was spitting, I mean, the machine was just like, I was standing there with orders coming out of this machine on paper, like you couldn't even stop it. I was like, rip, rip, rip. And I had a slew of what's called $2 brokers. So brokerage firms have their house brokers, and they have $2 brokers that are commission brokers that do overflow business. It's a relationship thing. So I've been both. I've been a house broker and I've been a $2 broker. Why is it called $2 broker? But back in the day, we got paid $2 for every 100 shares we traded. Now we get paid 0.0001 mil of a penny per trade. So the business has changed a lot. So I've had to pivot. As I told you, pivoting's important. Change is hard, but you got to go with it. So I had a slew of these commission brokers. I would scoop up hundreds of orders. The guy would walk by me, I'd hand it to him, and he would just go in, sell 500, sell 1,000, buy 1,000. I mean, it was absolute chaos and mayhem, but amazing. Crash of the 2000 bubble was a little different. My memory's a little skewed of the time. It lasted a lot longer. It led us up to the crash of 07 because it was way more pervasive. It was way more in the nooks and crannies of the market, right? It was the .com era, right? Suddenly a new sector popped up. Everybody loved it. So it was no different than a crypto or a meme or anything. Something new, a new product's on the table. Everybody wants it. They ride it up from 1 to 500. Yahoo came out at $3. It went to 450 and went to 3. The bubble burst. Right, but everyone was buying it with abandon. They were getting emotional. I got to own it. FOMO, whatever. It was the early part of FOMO.
Was that like the tone in the room, was it?
Oh, absolutely. I remember the day in 2000, I don't remember the year, but Yahoo was one of the first, I guess, tech companies that came out in the bubble boom. And it was the day that it went from 450 to 3. Correct me if my numbers are a little bit off. It was many years ago. But I was standing there and everybody had bought stock. I had never bought it, but even whether you bought it for customers, you bought it for yourself, when you see a new sector come in and everybody was buying it, right? It was the bubble boom, it was the tech boom. And the stock went from 3 to 450. Everybody owned shares of Yahoo. Everybody. Your mother, your grandmother, brokers on the street, people all over. I mean, it was the beginning of that whole thing. And Yahoo is just a name I remember. And the day it went literally from 480 or whatever number to virtually worthless, I was standing with a friend of mine who was a market maker, not in Yahoo because I don't think it traded, maybe it traded here. And he was just sort of sitting in the corner with a big smile on his face. And everybody who had invested in Yahoo was, oh my God, yesterday I was a millionaire and today I got nothing. So I walked over to him. His name was Frankie Murphy. He was a funny little curmudgeon guy, but super smart. And he had a big smile on his face. I said, everyone's freaking out here. Why are you smiling? He said, Pete, I've been here a long time. I'm a very disciplined investor. He said, Yahoo. I bought it at 5, I sold it at 10. I bought it at 50, I sold it at 70. I bought it at 200, I sold it at 250. I bought it at 400, I sold it at 420. The minute it went to 3, I was already out of the stock. I had made $20 million and I didn't care what happened. Okay, so that was such a learning experience. It's not how much money you make, it's how much money you keep. Right? We see it in day trading now, and that was a perfect example of that mindset. That the day that AMC went viral on memes, right? And we were trading it for customers. It traded right here, and it went from 20 to 62. After hours, it went to 75. I was doing an Instagram live here, and everyone was saying, AMC going to the moon, a picture of the spaceship, and and everyone's riding the wave. And I said, I'm begging you. No one got broke taking a profit. If you're in it and you got a couple of points in it, get out, sell half, do something, lock in your profits, right? Sell half, play with the bank's money. And they're going, you're an old man, you're a suit, you don't know, you hate us, you're the other. And I said, okay, it's going to the moon. I said, fine. It may go to the moon, but it's not going to the moon tomorrow. I promise you it's going to go down before it goes up. And I literally was berated by thousands of people on Instagram Live saying, you're a stodgy old man, retire, you little bastard, right? The next morning, they issued a secondary or whatever. It opened at 40, right? And it proved me right. And I don't need to be right. I just want to save people the pain. If I can do anything is share my experience and strengths that I've learned to get that, so you don't have to go through that pain. I've seen the Jordan Belfort line. I've been rich and I've been poor, and being rich is a whole lot better. And so reach out to me, even if you just want a phone call or advice, to test something you're trying. I'm available.
Definitely. I love that.
Pleasure,
Thank
buddy.
you.
Yeah, man.
My pleasure. So what an incredible experience with Peter there, aka the Einstein of Wall Street, Wall Street's most famous trader. Thank you as always. Make sure you hit subscribe. We have so much more coming, and we're breaking down the doors, as I said. Thank you.